Good morning, friends and traders. Welcome to the market forecast for Friday, August the 23rd. I'm John Hoagland. Thank you for trusting me with your time. It promises to be another interesting trading day today. As always, on the market forecast and the recap, we try and touch on the context of the market, which is constantly changing. And already this morning, we've seen some changes to the context of these markets. Economic releases this morning, 9 o'clock, new home sales comes out. That's, of course, Central Time. At the same time, Fed Chair Powell is due to speak in Jackson Hole. Now, markets will be seeking some sort of clarity from Powell and the Fed members that are in Jackson Hole about their plans for rates moving forward. We're probably not going to get much clarity. It's going to be difficult for him, I think, to just say just enough and not too much to knock markets around, which have already been knocked around a little bit already this morning as a warning from China, or actually a tweet from the Global Times editor Hu Xinjin about retaliatory tariffs from China. They're talking about adding $75 billion in tariffs on soybeans, automobiles, and oil. That has sent our equity markets to the downside and knocked a lot of the other markets around. We're going to take a look at those very shortly. The G7 conference is due to meet this weekend. The president is slated to attend on Sunday and Monday. And from what I'm seeing and hearing, he is planning on having some individual meetings with the other members of that conference. Make sure you like, share, comment, question, feedback is always welcome, and I do enjoy a good heckling. Good morning, Dante, Andrew, Gio, Michael. Good morning, Michael. Artemio, Alan, and Matthew F. Good to see everybody here. Why don't we go ahead and jump into these charts and see what's going on. All right, we always start with the daily in crude, and it's been a bit of a technical failure to accept above this trend line this week, as well as above the weekly kickoff high. Still some economic worries keeping crude oil to the downside, kind of holding lower highs. Are we looking at lower lows now? Lower volume yesterday. Open interest, only an addition of 200 contracts yesterday, so nobody really seems to care. Taking a look at the 30-minute here. Okay, here's our failure yesterday. Acceptance below that level, no acceptance above weekly kickoff high. Technically, I think this market was set to look for lower levels, and it got a nice little push in that direction this morning, thanks to that news about China tariffs. Really, it just kind of knocked us out of range, out of balance. The market is always going to be seeking areas of balance where two-sided trade can occur. What I'm really kind of looking at is our recent lows right here. Okay, this is it's a kind of an interesting area that the market has driven to and has begun to settle into some sort of very short time frame area of balance. So our recent lows, our current lows, look like interesting areas for an execution for me, and you know which direction that's going to be, I'm not quite sure yet. We have to see how the market responds. We've got another dollar to the downside before we see weekly kickoff low of 52.50, and settlement is all the way up here at 55.35. So we've got the gap. When we have a gap open, if we can't close the gap relatively early, I'll look for the market to maybe resolve down to that 52.50 weekly kickoff low. If we can hold the lows here, we may see this market kind of drift back up towards settlement. I'm not really looking at any major short time frame order of position imbalance, if you will. This was a pretty emotional move to the downside. We're going to have to digest that and see where we go moving forward through the day today. Again, it does promise to be another interesting trading day. Here's our S&Ps. 5 days really inside of balance. We've had five attempts to kind of accept or break out above the weekly kickoff low high here of 29.28 even. It looked as though we may be headed that way yesterday. And of course, some news came out in the opposite direction. Today, it looked like we may be looking for a higher opening today. And of course, we got another news event that has frightened longs from accumulating above that level. We mentioned, we've sensed that we've seen some longer time frame longs earlier in the week looking to accumulate some long positions for continuation to the upside. I don't think that they've been scared out just yet. I think it's going to take a bigger move than this to have them unravel those positions. It's, again, going to be an interesting trading day. Aren't they always? Context is always changing. So we had some longs in the overnight. Okay, we were looking at opening higher, still in range, still, looking at above the weekly kickoff high. And when when that tweet came out, when that news came out, of course, people got a little bit nervous. We've driven the market really basically down to yesterday's regular trading hour session low, not really driving that far below that. We're setting up at least a little bit of structure for us to lean on. If we're thinking we're going to be going long, I'll be looking for cheap trades. If we're thinking about viewing this as a pullback, I want to sell strength, because I'm going to be able to limit my risk. We've got some early information here. We're not even open in regular trading hours yet. Try and stay patient, because we have not really left our area of balance yet. All right, let's see what's going on in gold. The volume continues weak. It's going to continue weak. We're in an area of consolidation. We're still a short time frame controlled here. The balance that we're in remains really kind of tightening over the last 5 sessions. Open interest volume still weak. Open interest, we added 3,500 in open interest yesterday. Where and how and why, I'm not sure. Where, how, and why, I'm not sure. Sometimes it can be a little bit more obvious as to traders what traders are thinking or what they want to do when you're looking at open interest. But yesterday it was kind of an inside day, still inside range. I'm not really seeing why we had an accumulation of that magnitude, I would say, in gold yesterday. If I was going to make a choice, looking at this market, coming off that low of the balance area, kind of in an upward direction, I would have to say they added longs today. Basically the opposite of the S&P is we've traded to yesterday's high of range. We're balancing in that area, sort of. Okay, are we going to break out of this and head to the upside? It is a distinct possibility, particularly if equities show any more signs of weakness. The risk-off situation may be kind of on for the day. But I'm going to have to stay patient. If I'm really looking for bigger opportunities or bigger information from the market today, it's going to happen around our weekly low, which happened overnight yesterday. Okay, that weekly low is 1502.10. Our weekly high is up here, 1518.80. You can see that we've been in that range the entire week, so that's going to be more powerful levels of inflection in short time frame for us. Out inside of those two levels, the weekly high and weekly low, we're looking at short time frame levels with which to lean on or to be able to manage our risk. Okay, we're at yesterday's high of yesterday's high of range. We're also at the previous day's point of control. We've got a previous settlement price up here. We've got value highs up here. Okay, this is an interesting area up here. As to the downside, if we did get a little bit long and we continue to get long in short time frame here, we may see this market kind of fail up at these levels and return back close to settlement, which is 1482 even. So, the markets have fallen somewhat out of balance, not real bad out of balance, but we're still seem to be adhering to short time frame levels in the S&Ps and in gold. You're going to have to see if that manages to hold up throughout the day. All right, finally, after 5 days of testing this weekly kickoff low, we finally get a chance to really seek acceptance below that. Now, of course, we have new news in the marketplace, and we're going to have to see how that plays out for us. But at least we've got an important inflection level in the neighborhood to look for and to manage our risk against. Take a quick look at the 30. All right, so already we've got a lot of overnight shorts in this market. Overnight shorts, probably weaker money, probably many traders planning on going home flat tonight. If we can't bring in new business to the downside here, already we see the market kind of resolving. It's closed the gap. We see it continuing to resolve a little bit higher. Weekly kickoff high, settlement / overnight high might be an interesting target for an upside profit target if you are so inclined to look for that long, and always be looking to manage your risk. All of these contexts and areas that we're looking at in all of these charts offer us what I like to call cheap trades. Cheap trades. We're always looking for the cheap trade, because those tend to be the trades that don't last very long. They're not around for a long time, and you get to find out relatively quickly and cheaply whether you may be wrong or whether you may be right. Always looking for those cheap trades expands profit targets and possibilities for bigger profit targets when we trade close to points of invalidation, points of inflection points, and there's lots of them in multiple time frames. We just got to find the right ones and manage our risk. Always managing the risk. I'm going to take a look here and see if we have any specific questions here. And oh, that's the wrong mouse. So we said hello to some folks this morning. Matthew, yeah, China, you forced my hand. Yeah, that may be. It's a push and pull type of situation, isn't it? Good morning, Alex. Lou, good morning. Dante, Manuel, Trader PD, Artemio. Should we trade the first 20 minutes of the open, go flat 10 minutes before the news? That's entirely up to you. You know, the thing about it is these are known events. These are known things that are coming out. Nobody really knows what Chairman Powell is going to be saying or what he's going to be kind of focusing on. So I'm probably not going to play it. I'm probably just going to kind of watch, see what goes on, and maybe if I find an opportunity after he's done, as it's digested, maybe there'll be something that will come to you without expanding your risk of something strange happening. Take a look here. I got on my hands and watched the madness. There you go. Yeah, that was pretty freaky. Good morning, Dan. Good morning, everybody. All right, so we're getting close to equity open here. I'm going to take my deep breath. Stay cool, calm, and collected today. You know, when these markets change context like that, it tends to strip everybody's gears. Be cognizant of that. Look for the good opportunities today. We will not be having the market recap today, which I mistakenly called forecast yesterday. So we won't be having the market forecast recap this afternoon, another week or so, and we'll be back on Friday night or Friday afternoons. So just stay humble, stay grateful, stay creative in your trading today. Make sure you protect yourself. Look for those good opportunities. I'm hoping everybody gets out there and profits today. Have a great trading day. Have a wonderful weekend. We'll be back at 8:15 on Monday morning for the market forecast. Trade well, everyone.